Welcome to Universal Tenders, your one-stop tender service provider for all tender needs. We haul out tenders up to 47 feet and 25,000 pounds, ensuring safe and efficient handling. Our paint and fiberglass expert team offers comprehensive repair services, from basic touch-ups to full restorations. We provide certified engine services, offering maintenance, rebuilds, and repowering solutions. Additionally, we are proud to be a trusted Suzuki Marine dealership. Our facility also features a fully stocked marine supply store, offering a wide range of accessories and parts for your vessel. At Universal Tenders, we pride ourselves on precision tender services, ensuring your vessel receives the highest quality care. Contact us today to schedule your next service or repair.
Hello and welcome to episode 4 of the Rich as Fuck podcast, where we talk about money, investing, and getting financially free whilst living that yachty life. Today, I have the pleasure of introducing to you guys Mr. Ramu Tremblay, who is our first subject expert and not a yachty, and he will be here today to talk to us about short-term rentals. Before we dig in, everybody please remember to read the disclaimer. This episode should not be misconstrued as financial advice. This is purely educational and informative. Do your own research. Let's go. Hello, sir. How are you today?
I'm doing awesome.
Good. How are things in Hawaii?
It's beautiful out. It's like 1 o'clock here, midday. And it's pretty much probably like Florida right now. Just sunny and blue skies, and the ocean's just outside here. So it's all good.
That's amazing. So for those who want a bit of background, I've been fortunate enough to meet Ramu a few times, and he's been pretty instrumental in giving me advice about property investing, albeit a completely different market, even a different strategy where I focus predominantly on long-term investing, and he is rather specialized in short-term rentals. So for the listeners that don't know you, tell us a bit about yourself and how did you find yourself in Hawaii?
Yeah, so like you said, my name's Ramu Tremblay, and I actually am fortunate enough to have grown up on the island of Maui. And so it took me years to recognize like what a gift this is. And so I grew up here. I've traveled a lot. I live in a lot of places, but since 2010, Maui has been home. And so what was your other question, Charl?
How did you get into the short-term rental market there?
So my background is I became a real estate agent in 2005, but then kind of ebbed into, I got hired by a software company that was building a SaaS product in the real estate space in 2010. And then I worked with them until 2019. But during that time, I basically took all the profits from my day job working with them, and I started investing in short-term rentals for my own self. And I think it was probably 2019 is the point where my income from short-term rentals basically eclipsed my income from my day job. And so basically kind of went full-time initially just with the goal of continuing to invest and acquire more properties. During that time, in some of the buildings that I was buying in, some of the owners had kind of saw what I was doing in terms of like kind of gutting, renovating, and basically, building nice units. And that kind of resulted in doing this in management for others as well. So kind of what I do is it's a mix of investing, but also helping other investors basically kind of buy, renovate, refurnish, and then we also handle the management side. So that was kind of my path into real estate and specifically short-term rentals.
That's great. All of those words you mentioned, I believe that's the BRRRR method in bigger pockets. the buy, renovate, restore, all of that. I recently read a book
Yeah.
on that, and it's I don't. You make it sound pretty simple. I'm sure it's not. There's a lot of moving parts when it comes to flipping and renting out properties. And on that note, what were some of your earliest mistakes and lessons through those mistakes?
Yeah, it's a good question. And I think just to relate to like whoever's listening to this, getting started is probably the hardest part in terms of like actually getting into the game and buying your first property. It was very nerve wracking for me because I had a friend of mine who he showed me kind of his numbers on some of his units, but they just seemed too good to be true. And so my first property I bought, and I basically put almost every spare dollar I had into it. I bought it and, ended up gutting it down to pretty much the studs. And I made a lot of mistakes in that process, from not finding the right contractor. Basically, I tried to piecemeal together a team of, plumbers, electrician, drywall, paint, tile. And it was stressful because I was kind of managing my day job at the time. In retrospect, after, what I would have done had I known that now is like, I probably would have hired a general contractor to take some of that off of my plate, because basically I was overseeing all of these different trades and I didn't know a ton about the trades in terms of how to flush out a good electrician from a bad one or a good plumber from a bad one. Thankfully, I think we probably were a little bloated on that budget as a result of, like, had I hired a contractor, I probably would have came in less. And I think we would have got the project done a lot faster. I think now, like a project like that for like, 1,000 square foot, 2-bedroom, 2-bathroom condo would probably take, maybe 90 days to renovate. I think that one took me probably almost 180 days just because it was like, anyway, there's just a lot of inefficiency. I think that's probably a big one, is like finding the right contractor to work with who's established and who, kind of knows what they're doing. Trying to think of what other mistakes I made. It's probably the big one, is just like working with the right professionals if you're renovating.
I guess that's just one of those things you won't know until you make those mistakes. And it's quite funny that you mentioned 180 days being the longer end of the spectrum, where in a country that bleeds inefficiency like South Africa, that would be your lower end of the spectrum. You'd be relieved if you can flip something in 6 months. I've just been through it. It's painful every time. At least there you get a lot more bang for your buck, especially with the exchange rate. So you can afford to make a few more mistakes because they can just regut it and try again. But thanks, that's really good insights. And tell me, when you make the decision of expanding on your property portfolio, do you have a playbook of sorts? What are important things to look at when you're analyzing a property before you purchase it and then put it on the short-term rental market? And remember, our listeners are somewhat very unfamiliar with property, some of them. So we can really dumb this down like 5-year-old explanation, if you don't mind.
Yeah, so let me paint some pictures of like the market we're investing in and what I'm looking for. So I'm in Hawaii and I'm on the island of Maui. And when I'm investing, when I say short-term rentals, I'm talking about I can rent for as little as a day, or I can rent for as much as 180 days, or like, I could rent to, there's basically the smallest unit of time I could rent for is basically a day, versus a long-term rental might be, 6 months. And so I think one of those mistakes that I see made a lot is being overly optimistic on numbers and potential cash flow. And so, but it's like the process was and still is, when I buy something, I really kind of marry the market, which is I really want to understand, like, and I like, one of my processes, to make this very concrete, is like if I'm looking to buy in a complex, I will go to Airbnb and I will look because I'm mainly buying in like condos versus single families. And so I will go to Airbnb because they've got the largest kind of marketplace of two-sided marketplace. And I will look at comparable units and I'll look at their calendar and I'll look at kind of, how far out their calendar is blocked off. And then I'll look at what kind of their average nightly rate is. And from those two kind of criteria, occupancy, I can get an idea of like what their occupancy rates are running just by looking at their calendar, and then what their average nightly rate is. And I can usually use that as a baseline for kind of building like a pro forma, which is an estimate of how much potential income the property might produce. I think what's important is like, we're very fortunate in Hawaii. We're in basically we have year-round demand because of the weather. And so that's a huge factor is like, what market, like, does your market have year-round demand, or what do those demand, like, what do those demand swings look like seasonality? And you really have to build that into your kind of model, your income model, and not be basically lie to yourself. You need to be very realistic about the numbers and be very conservative to make sure that the numbers pencil. Does that answer your question?
That does. And yeah, you're right. I think it's very much in human psychology of always being overly optimistic on the upper line, and then not really considering what all your costs are involved as well. So people would be, okay, I'm getting $200 a night for the stay, but you forget about the platform fees getting deducted, the cleaning fees, etc., etc. There's a lot of phantom costs in short-term rentals, I believe.
Yeah, on the expense side, what's really important is you need to look at like capital expenditures, which is like, for example, like how old is the building? And so like where I'm investing is like some of these buildings are 30, 40 years old. And, it's not uncommon for a building that old for the HOA to issue like a capital assessment to owners, and sometimes they're lump sum. I think this last year insurance has skyrocketed, the cost of insurance. And so we've seen, like, one of our complexes, we've seen our HOA costs go from probably about $900 a month to almost $1,500 a month. And so you'd really need to be realistic on the expense side and to analyze like, where are these possible expenses coming from? And what are the expenses that I'm not looking at that might come back to bite me and affect, basically affect my decision to purchase this property. I think one of the other biggest expenses that like people really need to look at is like, are you managing from afar? Like, are you buying in a market that you're already familiar with, or like, are you going to have to use a manager? And a manager, depending on the manager, can run anywhere from 15 to 25% of your rents. And so that really needs to be factored in. We can dive into that if you want, like how to think through that in terms of, so let's say you're buying in a market where you're not, like how to approach that and to build a team and things like that. So
that is the perfect segue, because what I was going to chat to you next is us as Yacht Crew. We have very strange lives, very strange setups. We find ourselves in different countries all the time, completely not in control of our schedules. So I think for a lot of yachties with free cash flow that decide, okay, I'm going to start putting my money to good use, one of the first avenues they want to explore is short-term rentals, because we often use Airbnbs. We know how much we pay. So thus the deduction is it must be lucrative. But we cannot really, considering our type of life, manage such a thing unless you're lucky and you buy it in a market maybe where you're born and you have parents or friends that are willing to help you out as a favor. But for the most part, people will have to look at property managers. So how would you do that cost benefit analysis in electing a property manager?
Yeah, so not all property managers are the same. Typically, I personally would steer clear of a property management company that has too many units under management because it's really hard to align, personal, like basically align with the interest of every single owner and maximize revenue when you have too many units under management. Too many units for me would be, anything above 50. So like, for example, and so I made it's interesting because when I did not seek to start a management company, like I had bought and remodeled 3 vacation rentals, and those vacation rentals, I was looking for somebody to manage, but I couldn't find anyone who I knew we were putting good money into these in terms of renovating them from scratch, who would align with, who I was confident would deliver maximum returns. And so we built this boutique brokerage. So typically I would look for somebody smaller, but large enough that that they know what they're doing. So I would say like minimum probably, 20 units under management, and, maybe on the upper side, no more than 75, somewhere in that sweet spot. That they're running it like a business. They're going to have software. They're going to have a team. They're going to be very methodical about it, as opposed to, a company that's too large or too small. So I think that's kind of the sweet spot. I mean, I guess one thing that if it's an individual investor and they're just buying one property, one thing that they could look at leveraging is Airbnb's co-hosting feature, which is basically a feature that allows, you to find basically and invite somebody kind of local to that market to handle the day-to-day operations, what I would say guest messaging, coordinating cleaners, things like that, inspecting the property, coordinating maintenance, where it's not necessarily a full service manager, but it's basically boots on the ground. And then, the investor, i.e., you or whoever's listening to this, could handle all the back end, because my understanding, when you guys are on yachts, you guys still have access to the internet. And so you guys could handle kind of the back end marketing side of things. And you might even be able to handle like the guest messaging stuff. Like there's a lot of tools you can use for automation, and even Airbnb and other tools where when somebody books your unit, you can have a message go out to them that thanks them. You can build custom kind of automated workflows. But I think essentially what you're looking for is somebody who has boots on the ground, especially if you're traveling and you're on a boat, on a ship, or a yacht, that is able to get to the unit if you have an emergency, or is able to inspect the cleaners. That's an important part of it. Or able to, and even if they're handy to, because like things break. So I would argue that not everybody needs a full service manager. If a yachty is comfortable handling kind of the guest messaging side of things and the marketing side of things, that you could have somebody who you pay just like a monthly fee to, where you negotiate regular inspections and things like that, where they're your boots on the ground.
Yeah, I mean, that's very, very good advice and definitely plausible and doable, especially as you mentioned with automated workflows and how many AI tools are out there where you can pretty much just create an AI agent to run a lot of these things for you. I'm doing it with my longer term rentals, albeit, and I must confess, it's a lot less volume because it's not constant churning and burning of guests in and out. And then obviously you're specialized and mainly focused on Hawaii, but for listeners that, number one, maybe can't afford that market, and people interested in other areas of the US, what do you think are pretty hot short-term rental markets right now?
So I'm always looking at seasonality, and like the more days that I can rent per year, the better. And so like, again, somewhere like Alaska might be great for a very short window of time, like the summer, but then the winter, like demand's going to fall off a cliff. And so I would say like, there's a couple of things to look at. I'd say like Florida is always good. There's some markets in Florida where you can purchase, and, most of the year, the weather's pretty good. Obviously there's going to be some seasonality to it. I think there's other markets like Nashville, which is like, I'm just talking with a friend about it yesterday, which is one of the fastest growing cities. I really haven't studied a lot of other markets. I mean, I have looked for myself. I've looked at other islands and stuff like that. But generally, yeah, you want to go where I guess the sunshine is, where you don't have these large weather fluctuations like San Diego, but then you also want to balance price. And that's why I said Florida. I think there's some markets in Florida where you don't have like California prices or Hawaii prices, but you might not have, commensurate type of rents either. So.
Understood. That's a very thorough and fair evaluation. And then let's talk about financial risk. So I remember in the beginning of our episode, you mentioned that you started out in 2005, I believe. So you were around within the markets when the global financial crisis in 2008 came about. Obviously, these things are natural. These happen. It's just economic ebbs and flows. And we experienced a much shorter time period drawdown during COVID. But what would you say to prospective investors to hedge and kind of protect yourself for these black swan financial crises?
So yeah, to relate, I really didn't pay attention to market cycles or cash flows or anything like that. I bought at the wrong, I trying to time markets is a fool's errand, but I did buy, shortly before 2008 and ended up losing a property during that time. And that was very traumatic. In retrospect, if I could go back again, I would look at it, the numbers and scrutinize them from a cash flow standpoint. I think if you haven't read Rich Dad, Poor Dad, you should turn the podcast off and go read it or listen to it. Like that, I had next to my bed for years, and I would just read it nightly because I wanted to burn that information from a just real estate investing standpoint into my brain, especially after 2008. What I would say is I don't even know where I heard this, but it's like the money's made when you buy. So you need to buy right in order to sell right, or even I'd say rent right. You need to buy right with enough margin of, safety. And that's why I said, going back to what we're talking about is don't lie to yourself to be overly you need to be very honest with yourself and do a good analysis when you're going to purchase a property. And the best way to do that is to use comps on the sales side, but also on the rental side. You want to make sure that the rent, basically the rent and the expenses and the cash flow is true to form. It's true to life. And so I would be very methodical about, and actually showing somebody else your numbers who you trust to make sure, as asking what are my blind spots here? What am I missing, or what have I not added, or what are the things that could come back to bite me? The other thing that's really important is to look at legislative risk, which is, you've seen this in New York City and other markets where people bought properties thinking that they'd be able to short-term rent them, and then the legislation changed against them. We have some legislation here in Hawaii which is targeting vacation rentals, which is an existential risk for us, and so I think you want to also look at the legislative side, or in making sure that there's pretty sound footing in terms of being able to short-term rent. And obviously that can change. That's one of those things we don't have control over, but you kind of want to look at from a governance standpoint, what is the general prevailing attitude in the market you're looking at towards short-term vacation rentals? Are they under the scalpel, or generally do they look at them as an important part of the economy? So those would be kind of my pieces of advice, is the money's made when you buy. And so you need to buy right in order to rent right, and then sell right down the road. And, building a margin of safety into, whatever your estimates are. And then also just looking at kind of the legislative risk. And if you weren't able to short-term rent this property that you're looking at buying, what would be the potential long-term rents if you had to go that route? And making sure there's enough kind of margin there that you're not left holding the bag.
That is, that's exactly what happened to me with my very first property acquisition back in Cape Town in South Africa. The intention was to go on the short-term rental market. And Murphy's Law, within 2 months of owning it, they had an annual meeting for what we call the body corporate, which the Americans call the HOA. And there was a annual meeting, and there was a decision made that there will be no short-term rentals. So all of my calculations were made based on the income of a 50-60% occupancy rate, which is pretty average for that area in Cape Town. Obviously, that flew out of the window. Luckily, I managed to do some nice cosmetic repairs and to get the rent pushed a little bit higher to cover my expenses. But that is a primo example of how certain things are just out of your control, and that you need to base your research and your due diligence in such a wide lens that you can maybe try and consider unforeseen circumstances like that above. Okay, and now to get on a bit of a lighter note, and knowing yachties always like a bit of juicy gossip, what are some funny / horror stories that you've had with guests staying in your units?
Yeah. So to be clear, like what I talked about earlier, I think I can't imagine having not managing in the same market that I'm in, just because just stuff happens all the time. Like problems constantly come up, and it's one of the things that allows us to have a management company. Gosh. So just this last week, I don't even this is just what life looks like managing a property. We had these drain flies, but we could not find where they were coming from. Like we had the drain lines cleared, and they just kept coming. Like we're talking 50, 60, 70 flies in the unit while guests are in there, which is not good. We finally figured out yesterday that there was a little bit of water pooling underneath the wax ring had failed. So it was underneath the toilet area where the larvae were hatching. So it was not visible to us. And it was like the last thing we did. We had a plumber saying, you need to rip open the wall. And I was like, no. And so finally we found it yesterday. That's one. Let's see. I had an inspector just this week give me notice, basically say I'm quitting tomorrow. And so I'm doing inspections today, and I'm meeting a potential inspector. We have had, let's see.
This is all in 1 week, folks.
Yeah. I mean, it's nonstop. So today we have an AC leaking, which we have an AC guy going out to take care of it. We've had pot in units where, the neighbors upstairs are calling us saying, or the manager is calling us saying your client, your guests are smoking. And, that's happened a few times where I've literally had to, this one party, I told them, knock it off, and they continued doing it. And so I had to cut off their access code. So just because, I mean, they're just smoking, basically filling our unit up with marijuana smoke, So, that wasn't this week. I mean, the thing is we also have we have over 30 total units under management total. And so if you own a single vacation rental or two, it's not like you're going to be dealing with this stuff every day. But I'm sharing this with the reality that in a vacation rental, I think it's very different than a long-term rental. It's stuff goes wrong, and you need to have somebody to take care of this stuff. We've had people, one of the brand new units this was in 2019, the second unit I bought, had spent quite a bit of renovating it, new furnishings, and we had a party. And this is not true. We don't have people party a lot in this market, but we had this young group come, and just there's vomit all over the place, and
wow.
We charged them for it on new furnishings. So it's just, there's always going to be something with short-term rentals. So
I think that's a very fair, not even an analogy, just a good way to frame it for people, because it's not just fun and games. There's and like you mentioned, it's a very different market than your long-term tenants that actually give a shit about the place because they're living there the rest of the time. Whereas if a bunch of guys fly in for a long weekend in Hawaii, I mean, I was 20 years old once. I know what it's like. It can be quite debaucherous.
So I think that's a really good point. And so like for recently, I was looking at like possibly acquiring some units in Honolulu, and I went and like I did a deep dive in that market on Oahu, and I spent about 9 days there, just kind of went there to learn as much as I could about the short-term rental market. And what I decided, it was a hard no for me, because what I found is a lot of people go to that destination to party. And so like a Miami's probably going to be like that. And so in our market, it's typically people traveling from afar and families and stuff like that. So I think like it's really important to marry yourself to the market and understand who your typical traveler is, who you're catering to. For our company's Luxe Maui Properties, and we do like most of our units, we renovate or our owners renovate, and so they're nice quality units. And generally, what I've found is the nicer the unit, the higher the cost, and most of the people who are willing to pay that higher premium are used to actually, generally speaking, taking care of stuff. And so that's the other thing, is you want to figure out who your typical kind of your ideal kind of customer is, because if you're kind of doing a commoditized unit where there's a lot of other units in the market that look like that, and you're chasing like a price conscious traveler, you may actually have more problems and things like that, and so yeah.
Yeah, that makes a lot of sense. And then to close out, what's next for you? How do you plan on expanding? Do you plan on expanding, or are you just gonna realize enough's enough and gonna start surfing all day?
Yeah, it's interesting. I read a book recently called Never Enough by Andrew Wilkinson. Are you familiar with the book?
Yeah.
Fascinating book. And for like, for a long time, the outcome for me was build, 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 and acquire. But I'm like, at some point, what am I optimizing for? And I feel like I'm kind of moving into a stage of my life where I'm like, I'm optimizing for the enjoyment of my time, as opposed to, like wealth is great, but at the end of the day, like at what point is enough enough? And so like, while I'm still looking for opportunities, I'm actually looking at, more unique kind of properties, and doing less deals. But when I do a deal, it's like doing a very, unique kind of, like basically very unique properties is what I'm looking at. It's probably the next chapter. So maybe like a deal a year or deal every few years. But yeah.
That's a good strategy, because I think that's going to stimulate a different part of the brain from the commercial analytical one. It's like, oh wow, let's convert this cool looking tree into a home that people can stay in. No?
Yeah. So there's another guy, if like on the short term rental front, I would recommend. There's a guy named Isaac French. And his newsletter is incredible, but his whole thing is like talking about like these unique hospitality experiences that people are doing around the globe. I was just reading one where they built these like glass kind of houses that sit on the edge of a cliff down in Patagonia, like totally wild. And so, yeah, that's kind of where I want to kind of research and, adventure.
That's awesome. And normally at the end of the show, I ask my guests, what are some resources that you recommend? I love that you already mentioned Never Enough. I actually read that book back to back after I read Day with Zero by Bill Perkins, which is kind of a way to frame that, at some point you need to, like you just mentioned, move into the enjoyment and the sacrificing the hard work for actually reaping the rewards for all of your hard work. But what are other platforms and resources that the listeners can check out to get into real estate investing?
Yeah, I would say again, like I said earlier, if you haven't read Rich Dad Poor Dad, that should be like first and foremost. I haven't read a lot of really great books on short-term rental investing. Just trying to think of who else. my interests are just so divergent all over the place right now. Like
It can
recently, for the
it
last,
can be any recommendation. It doesn't need to be married to this niche. It can be the Bible.
yeah. So like I'm very fascinated. Obviously, AI is going to change how everything works, and so I'm really fascinated by understanding kind of where the puck is going. So there's a podcast I listen to daily. It's called the AI Daily Brief, which kind of just sums up, in like 10 or 15 minutes, like what are the developments in that. Yeah, I'd listen to a lot of podcasts. Listen to Andrew Huberman on the health stuff. I'm super into, kind of understanding biohacking and just general principles of good health. I just read all over the place. Like I'm reading a book called Chip Wars right now. And so, there's so many great resources.
We don't want to be reading that on boats. No, thank you. Nothing called Ship Wars.
No. Chip.
Ship Wars.
Not Ship Wars. Chip, like a microchip. Yeah.
Okay. Like semiconductors.
Like semiconductors.
Okay, got it.
Yeah.
Okay. Holy shit, that's going to be a funny little clip now.
Great.
Well, Remy, on that happy, smiley note, thank you for taking the time to talk to us yachties today. I hope everybody listening gains a lot of value. And I look forward to potentially seeing you on the beautiful island of Hawaii in the not too far future.